Ladies and gentlemen of the crypto space, we're live on a Wednesday, June 5th at 11:34 a.m. Man, that intro music gets me jacked. It's exciting. It's happening. The stream is happening. We're back with another rational episode in the most irrational space of the entire frickin' planet. Degeneracy reigns supreme. Insanity is everywhere. But we are calm because it's happening. Investors are everywhere. No, they're not. Investment is supposed to be boring AF. There was a time when that was the case. This was not an exciting thing. It wasn't a thing to get rich quick. It was something that took a long ass time for capital to work its way through a business, for the business to become productive. It took years. Years. So, here on the Rational Stream, we bring it back to the roots, where investing is boring AF, but it's not. That's what's crazy about investing in crypto businesses. It's exciting. It's just not degenerate exciting. I mean, literally, as an investor, I see the cyclicality of markets, and it's every couple of years. And that's going to continue because of the structure of the system that we've talked about very specifically, very precisely, with great detail. The mechanisms, the mechanics, the pressures of the refinancing cycle, which contributes to the global currency expansion cycle. This is exactly what Raoul talks about, but I talk about it the way I understand it. It's become predictable to a degree. If there's capital, people are going to want to deploy it into things that are interesting because capital flows from underperformance to outperformance. And what outperforms the most? Financial products and services of a global nature. Executing regulatory arbitrage, geographic arbitrage, interest rate arbitrage, risk arbitrage? I don't know. Yeah, really, that's maybe a true statement. Risk arbitrage. You're taking risk, exposing to commercial banking, whereas you're not necessarily taking the same degrees of risk with synthetic dollars because of the risk mitigation systems. Commercial banks have a concept of hold to maturity, where their balance sheet is impaired, yet not impaired because of accounting rules. But in crypto markets, you got mark to market in real time. There's no HTM. There's no finagling that. You're over collateralized, and if you become under collateralized, you're screwed. You're losing your money. You're getting liquidated. That is risk mitigation. So the thing that I have talked about for so long and will continue to talk about is not only is the crypto space exciting and interesting, it carries a very, or a better, a much more palatable risk profile as compared to traditional investments in equities. You're dealing with the risk of regulators. That's crazy, and that's what's so egotistical, narcissistic, or just arrogant of the regulators in the United States, because these products, are they of the United States? But if I define it to be the case that the regulators themselves are introducing risk, why invest in the United States? Why not invest in a market that is exposed to the planet, that's above the United States? It's a market accessible to all markets, but of no market. And that's these chains that we discuss, a market of markets, of no market, but accessible to all markets. The regulators are a risk. And sure, the problem is they're regulating people, protecting them from themselves because exactly the introduction, the degeneracy, the lack of competence, the lack of fiduciary responsibility to oneself. People cannot protect their own interest on average. Obviously, we're professionals. I'm a professional. I'm a professional financial manager of my own capital. I exercise fiduciary responsibilities for myself and my family. You all need to do the same for yourselves and be professional. This is not a game. This is not a drill. The captain says crypto investing is professional. Damn right it is. This is a professional activity. And the regulators introduce unnecessary risks that I would like to avoid. My 2 cents. The regulators of which country? That's a fun one we've talked about. Look at Bitcoin up at 71,633. Woo! So we saw big inflows yesterday, close to $1 billion. We saw Canada cut rates. Europe's going to cut rates. They're all going to cut rates. The U.S. will be last to cut rates. It's a big world out there. Is it most important that the U.S. cut rates? No. I mean, literally, they just announced the SBA administration is going to start issuing up to $5 million loans. And the point of them doing that is they're not going to issue the loans at, Fed funds rate plus profit margin for commercial banks. They're going to offer some sort of favorable terms. And the whole point of Fed funds is to restrict, capital formation because of interest rate sensitivity. And they're going to bypass that. The whole system is full of shit. The whole system is one giant distortion at this point. So that's why the system has become so remarkably consistent and cyclically predictable in many regards. Predictable under normal conditions. There's always the potential precipitation of unpredicted volatility, but that is what's the word? An aberration. You can't account for aberrations. So you engage as an investor according to the cyclicality and let the aberrations manage themselves, correct themselves. They self-correct. The system economics is designed to self-correct. That is what a recession is. A recession implies prices are too high. People stop buying. People stop buying. Prices come down. Economics is self-correcting, and these fuckers are just interventionists, and it's not going away. It's not going away. You play the system as it is constructed and as it is dealt to you, and you don't imagine a world that isn't. You don't imagine a market that you want to be in some fairy tale land. You play the system as it is. And that's why we're here today. And we do the things we do. Because we have discussed the system the way it is. And we see extraordinary opportunity. Stay rational. Raul, good morning. Tape pusher, if gamblers learned to be investors, you'd be out of business. No, I would be retired. Because if investors are what people became, which they will over time, it takes time. Once you earn capital and you have 7, 8, 9 figures, you're not doing the same kind of gambling. In aggregate, people of that capitalization are becoming investors. So I still be able to talk about the topic because the majority will never be investors. The majority don't have patience. That's exactly what Warren Buffett always talked about, that the market is the greatest tool to transfer capital from the impatient to the patient. Be patient, my man. Diego, hi Noah, which is, for you, the best way to expose the curve in CRV, but with a small bag? So let's start with that first sentence. Why would you expose the curve with a small position? Do you think it's going to do some sort of asymmetric appreciation with a 3 billion fully diluted token count, 2 billion for current circulating supply, give or take, with its inflation rate, which is 17% per year, and then in August it significantly reduces. Is that the most reasonable thing to do with a liquid position. So you want to expose to it, but you didn't say you want to invest in it, so you don't want to necessarily lock it. So you need to be a little bit more specific with what you want to achieve. So exposure to it in a liquid form means a cash position, which means you have directional exposure, because if something is liquid, at some point anything that can be sold needs to be sold. So it might not be necessary. Like an Ethereum is much more palatable as a cash position, even including interest rates. You're not temporarily exposing to something for 30-40% interest rate. Considering gas costs, just as you said, you're scared of the gas fees and the claiming requirements and transactions, and you need to convert your revenues into a preferred denomination. So all of that is expensive. Technically, if you're so interested, there are products, and I did see your message before stream, so I conveniently pulled up those products. So you have STYCRV. It's a urine product that produces 40% APR, and that comes from vote rentals, and there's no voting to do. There's no transaction fees. It's just auto compounds, and I mean, have at it. I state these things from my perspective, and I give my stream from my perspective, that these types of products are not of interest to me. But when I see these products, I get excited for the way I have exposure to the business, the curve business, because I know these products will be enticing to the majority. Now, you yourself are not part of the majority because you're listening to this content, but the majority never, ever, ever hear my content. The majority do not know my name. So the majority will be enticed by 40% APR on about 5K, which is, I mean, it's life-changing in many countries. Certainly not in Europe or, you know, developed Asia and North America. If you're in the middle of Africa, you got $5 grand and you're making $3 grand a year. That kind of changes everything. So I'm here, definitely not here to judge, but I'm here to break down the nuances of the decision-making process. So urine and ASD curve, 41%, because Stake Dow is doing what they're doing, and Stake Dow is doing interesting things. And this is Aladdin. This is the concentrator, and this is the product they offer, which is an auto compounding, 41%, and that's enticing to many. Hope that helps. That's about it, because just remember, if it's a liquid position, at some point, anything that can be sold must be sold. And that is something I want to avoid. And that's how I've constructed my portfolio, to minimize that responsibility and the work required to sell at the most favorable time, the optimal time, because that takes effort. That takes looking at the data and understanding where we are in the markets. And that drives me nuts because, Jesus, look at Bitcoin ripping on a day move, just popped to 100 from about 90, 91, 92. Not even. Move was at 82. And now it's at 100. And Bitcoin's popping. You get a sense of where things are heading, but man, the path is going to be meandering, and it will drive you nuts trying to figure things out. Oh, do I get in? Do I buy now? Do I sell? I can't do it. I can't do it. I'm too old for this shit. I need boring investing. Fugu, good morning. Connect the dots, good morning, Raul. I was listening to Andreas, yes, and he was saying that Treasury buyback will start in July, and according to him, liquidity outlook will be positive come July. Well, we'll see it in the data, and if he's saying liquidity outlook is positive because of Treasury buybacks, I don't see that as a reasonable statement. Treasury buybacks are basically zero in the grand scheme of things. $2 billion a week, that's relatively zero in government terms. So what Treasury buybacks will do will, over a fair amount of time, reshape the curve or adjust liquidity conditions in the relatively illiquid parts of government debt. Um, So they want to obviously probably clean up the 20-year and the stuff that just doesn't have a lot of depth. And that will reduce volatility. So the whole point of Treasury buybacks is to decrease government debt volatility. And you guys know what happens when government debt volatility comes down. So the best thing to say about Treasury buybacks and what I just said about it, the impact of it on volatility, is that just contributes to the confluence of data points and understanding the mechanics of finance that are leading us into uh, the zone, the banana zone. Like the convergence of all these positive forces on the capacity for the system to expand currency supply at the global level. And then everything else just follows suit, appreciating nominally. Hope that helps. Raul present. Good morning, Cap. I prefer owning convex over curve. Uh, that is a conversation that will never end, ever. I have never played. Hi, Noah. Flywheel Captain in the house with the alt. DeFi dope. Hey Cap, have you ever done math on Nile emissions versus fees, rebates, calculate, break-even point on volume? I'm a bit weak in maths, but it seems rebases doesn't come close to offsetting emissions. Yeah, so Andre's original documentation, it's designed, and these are obviously implementations by teams that are derivatives of Andre's original documentation. So the whole point, or the way to think about it, is they're designed to offset emissions, to decrease the inflation exposure that lockers will experience. And they're not designed to entirely offset it. That'd be nice. I think that'd be crazy, but that might actually not be good. It's probably a conversation to be had. So you would think that, or I would have loved the time in market. If you're early, you receive inflation relative to locks for the week, which means you are retaining your percent ownership of the protocol. That would be probably bad. But I thought that was an interesting concept that I kind of read early on. That's certainly not the case, just as you're describing. That's okay. It is still, it is competitive. And that is arguably maybe better than just whoever was earliest retains their percent ownership because the inflation of locked positions is completely compensated. I don't know. That is a monetary conversation to be had, a monetary policy conversation to be had. But as for maths, what's pertinent is X, Y, and Z from an investor standpoint. How much does it cost? How much is it paying? And how likely is it to continue paying in the future? Excuse me. And that is what's most interesting. So we were talking last night, Errol and I in Discord, and I reminded myself in a response that what's the odds of these things failing? Because we must consider that. And I remembered something that I've thought for a long time. This entire market is testnet. The amount of capital in crypto is basically zero in the global landscape. All you need is basically one of these protocols to become systemic infrastructure, and you're done. Even with a relatively small exposure to it. Who knows what that'll be, but the point is 10x, 100x, 1000x, and the associated cash flow of a 10,000x increase in volume, and everything becomes redundant with regard to how much you need to make it, quote unquote, make it. So it's kind of like all you need is one of these protocols to succeed. So that's generally something I think with regard to a response in a conversation to persons that are questioning: is it Mantle? Is it Linnea? Is it an Arbitrum, Optimism, Phantom, Base, Fractal, yada yada yada? And who knows? We have no idea. But all it will really take is one of these protocols becoming structurally significant in global finance, and that's all that matters. So um, expect protocols to fail and not succeed. Expect chains to fail and not succeed within the next 10 years, 10-year time horizon. And that's always something that I have in my mind. I expect certain positions to potentially go to zero. As of right now, everything looks like it's about to go apeshit vertical, but that's another story. Fugu, this is a borderless market hovering over our heads. This is the cloud of finance. A market of markets, accessible to all markets, but of no market. That's some crazy shit. In the book of Sovereign Individual, there is a mention that in the future there will be a class of ultra-rich people who will be on the parabolic growth of well, hello. uh, I mean, that is literally what this is. So, good reference. Raul, if U.S. cuts last, won't DXY go up? No, cutting rates drives dollar down. Uh, Technically, other countries cutting should put upward pressure on the dollar, which the U.S. doesn't want at this point. If the U.S. wants to reshore its manufacturing base, they can't do it with a strong dollar. This is like Luke Groman's wheelhouse. So that's where we are. We're in the realm of significant distortions, like foreign nations are cutting rates. DXY would be pressured up, but that's contrary to what U.S. policy wants to do. U.S. policy wants to have increased Fed funds rate to restrict commercial banks domestically, yet SBA is putting out small business loans to bypass Fed funds rate restrictions on balance sheet capacity of domestic commercial banks. So there's all these weird distortions all over the place. Um, so I always come back to like Brent Johnson talking about dollar goes vertical, treasuries yields collapse, U.S. stock market goes vertical, crypto goes vertical. I don't know. You get all this weird stuff potentially playing out if you really go through all potentialities of financial mechanics. So just U.S. interest rates is not the story and never was. Fed printer go burr. Jerome Powell go burr. That whole shit in 2020 and 2021. That was never the story. That was just a pure example of people not understanding the mechanics of the global financial system. Frankly, that's the same thing with the Bitcoin halving, for what it's worth. Noah speaks like Morpheus. Yes, yes, I do. Some people say I talk like McAfee at times. Arrows in the house, good morning. It's hard sometimes to see the forest through the trees and wait for these theses about increased revenue to play out. Yeah, but that's the thing, and that's what I've learned in my old age. Um, Theses. We're going to semantically digest the statement. Semantics count. Words count. Theses. These are certainly theses until proven empirically. So it is hard. Certainly, there's a lot of emotions, and humans process emotions second by second, but these theses will take time to play out. Increased revenues. Uh, so I often think in terms of not increased revenues. I've trained my brain to think in terms of current revenues, which is why I talk so much about XYZ. How much is it currently paying? And that's really what brings me my satisfaction. You know damn well how much things are paying on Friday. Well, frankly, Wednesday, today, 8 p.m., Arrow, you know. And if that is the quantity of capital I will have access to forever, I kind of would be like, oh, that's cool. So that is a great way to adjust your mindset to allow time to pass. Uh, Logically, we can get excited about where things may head, but things have not headed there yet. That is speculation. So that's why I talk so much about the present, XYZ. How much is it paying today? Because we all sure damn well know that why wouldn't revenue go up 10x? Why wouldn't revenue go 100x? Why won't Ethereum have a couple $1 trillion of the liquidity, which will bleed over into every one of these markets in which we're exposed to, and all the liquidity goes 10x? And if the liquidity goes 10x, what do you think the volume does? It goes 10x, 100x. So it gets weird. So that's generally my expression of what I expect to experience. So my comfort zone is today. It's Wednesday. How much do we get paid tonight? And I know damn well things are going to be weird because history says it has gotten weird under these financial conditions that we're about to experience into Q3, Q4, Q1, Q2 of next year. And to top it all off, you got the secular adoption, as Raul talks about, and I just described. If you get all this capitalization at mainnet level, it bleeds over into the alt chains, and it gets weird. Just the numbers could get really weird. So I very much temper my excitement. Financials and capital management are supposed to be boring. So as much as we all want to be excited, I would encourage what I do. Don't be excited. Be today. And that will serve you the best. Hope that helps. Robert, good morning. Can you break down how Treasury refinancing juices liquidity? It doesn't. Treasury refinancing settles outstanding liability. So there's amount of debt that has come due, and the Treasury must, they're not going to print, they're not going to expand them zero, and they're not necessarily going to directly monetize as they've done historically with QE programs, but they'll do it indirectly via commercial banks and regulating the commercial banks to monetize more or less indirectly. But what does refinancing do? Treasury is going to pay the face value on $10.8 trillion worth of instruments. I mean, these are all rough numbers. And that means those instruments are no longer backed by collateral. They have been de-risked. They are now backed by actual dollars. So that deleverages the system in regards. And then those newly issued treasuries that were sold to pay face value on maturing debt make their way into circulation. So fresh on the run treasuries have a characteristic that they have yet to be rehypothecated. So existing treasuries in circulation around the world get rehypothecated over and over and over and over and over again. Each time they get rehypothecated, they expand the currency supply. So fresh on the run, coming out of treasury auction, has that capacity to be rehypothecated, which is fuel, jet fuel, to expand the currency supply. So what do you need aside from collateral to expand global currency supply? Well, you need favorable terms, a favorable interest rate environment. So two different perspectives to have on that. Higher interest rates obviously involves higher servicing cost for a debtor that wants to create dollars to engage in some sort of speculative business activity, some sort of entrepreneurship. So fortunately, 5%, 4%, let's say, they get to cut sometime whenever, 4.5%, is relatively serviceable. Most businesses could achieve more than 4 or 5% in business revenues, because ultimately it's a carry trade. Everything reduces to a carry trade. So if you're doing business activity and you're pulling in 20% of the money, you can service 5% debt. So that's one side of the coin to consider. 5% is still a relatively expansionary interest rate value. And the other side is from the banking side, which we haven't seen since pre-GFC 2008. At these interest rates, the banks have more money to make. They're going to be making, people will be paying that interest rate. So that entails there's bonuses. Well, frankly, it's the Fed that ultimately pays that interest rate. And then the Eurodollar system now has assets on their books, which they have to match with liabilities, and that's why they're able to loan money. That creates the liabilities to match the assets on their books, which they basically synthetically create that are earning this kind of interest rate. So now the bankers have bonuses they could throw around. Oh, you want to go lend 10 billion or half a trillion dollars and give the borrower a 1% bonus. And here, take a half a percent for yourself, banker. So at 5%, everything was 0% for the last forever. For the every cycle, every currency cycle, 4 year cycle, as people think in terms of, has been at 0% since 2010s, all of 2010s. It's been 0% basically. And now we're at 5%. So now there's a lot of banker side bonus money, fun bucks to throw around. So all of a sudden, bankers are going to be, oh, let's go make that paper. It's a picture like an old school movie, like the Boiler Room. There's just money to be made all over the place at the banking level. So they're going to be pushing out money, incentivizing people to borrow, paying people to borrow. I mean, that's kind of something we're used to in the crypto markets. That's why this is going to be a very weird cycle. The conditions for this cyclical expansion of the global currency supply hasn't occurred since pre-GFC, and post-GFC, it's a different world. Post-pandemic, post-2020 is also a different world for that matter. So it's going to get freaking weird, guys. It's going to get really weird. And that's a statement that is a manifestation of the mechanics of the global financial system. That's why it will be weird, because the mechanics will be weird. Hope that helps. Raul Fugu is Tapioca DAO project, which would suit your ideology of XYZ. Would Warren Buffett buy it? So technically, no. Let me explain. I'm a seed investor in Tapioca, so that's all public documentation. They posted it on social media, on X and whatnot. So XYZ is today. A seed investment is speculative, future. There's no revenue. XYZ implies you know what the revenue is. How much does it cost? How much is it paying? And how likely is it to continue paying into the future? I prefer XYZ, and I have restrained myself significantly with regard to investments. I have had seed investment opportunities, which I do pass on a lot, most, if not most. But Tapioca was something that caught my fancy. And this was back in, was it 2022 already? Jesus. Pardon the expression. But that was the end, that was like December 22. And that is something I have exposure to. I happen to have a high opinion of it. I think Tapioca is the fullest expression of layer zero in financial form. Layer zero being facilitator of cross-chain liquidity, cross-chain messaging, not an implementation of it. Stargate's an implementation of it, but layer zero is dealing with liabilities and credit and money markets. So if anything, Tapioca is the expression of layer zero in financial form. Seamless cross-chain, the Solana implementation, you're literally going to be seamless across everything. That's wild. So PA on it is fascinating. It's quite exciting. But what do I always tell you guys? Don't be excited. This is not a game of excitement. This is a game of professionalism, and this is a game of boredom. So do not expect returns. Why? Because if returns happen, then you're excited. And if you didn't expect returns and they don't come, you are also correct. And that's the best way to proceed in markets. That will give you the most sustainable psychology, especially in these very volatile markets. I wonder what would 10K purchase of Tapioca do in the long term? You have no idea. I have no idea. Nobody has any idea because the protocol isn't launched yet. And it's literally like 5 minutes away. Oh, why don't I have it here? I mean, it's literally like 5 minutes away. yesterday's uh, X cast, whatever the hell they call it nowadays, was quite interesting. So it's literally, I was the 11th, so 6 days, and we get to see what Tapioca starts to do. Bear in mind, it takes a long time for protocols to get traction. So expect it takes time for trust to build, so expect much time to pass. You have no idea. That's why early investments have increased risk exposure. No idea what the hell they're going to do. Hope that helps. Raul, thanks for answering all the questions. Appreciate it. Always a pleasure. Patrick, good morning, Cap. Thoughts on other countries that will follow Canada in restarting the printer soon? It's dominoes. I don't think anyone expected Canada to go so quick, given the state of the housing market. I mean, Canada is literally a catastrophe. The degree of socialism, Canada is an absolute catastrophe. Oh dear, the housing market's a catastrophe. I can't even talk about it. I feel bad. I mean, I feel bad for the U.S. as well, but geez, Canada's bad. So I'm really sorry for folks that are still there, if anyone's listening. Uh, but cutting rates, given the state of the housing market, oh God, it's bad. Okay. But it's dominoes with regard to the rest of the world. Once, I mean, China's easing. I don't know what the hell Japan's going to do. U.S. has to cut because of Japan. That's, I mean, Weedlack talks about that. Everyone recognizes that. Where the hell is the yen? Oof. They spent like 60 bill trying to get control of their currency, and that doesn't even make sense. You can't get control of your currency when you have a 5% spread between Japanese rates and US rates. Oh my God. So the only way the yen appreciates is if the carry trade implodes, and if the carry trade implodes, US rates come down and they have to unwind the carry from Japan perspective, and that pushes rates up. So you get all these weird distortions. Fed funds rate comes down, but the long end is going up because they're unwinding and they're selling. I don't know. It's going to be very interesting mechanically to see what plays out. I think our Fed doesn't want to reduce rates because I think they're afraid of rapidly unwinding the Japanese carry trade. And frankly, I'm just most curious of a currency expansion cycle occurring with interest rates basically where they are. Will we see this play out? Is it real? Is this really going to happen? Are we about to see a currency expansion cycle at greater than 5% interest rates? You ain't ever seen anything like this. That's the whole point I try and express the most. We have never seen anything like what is coming. It's going to be weird. What's up, y'all old age enjoyers? Yeah. Yep. Maybe it's easier to be calm when you're old. Because, like 10% of a 40-year-old's life is 4 years, but a 20-year-old, 10% is, like longer time frames are a shorter part of an older person's life. Longer time frames are a much larger part of a younger person's life. That's the point I was trying to express. So it's much easier for an older person to say, yeah, I'll check back in 4 years, but for a 20-year-old, 4 years is 20% of their entire life. So that's something to consider. Raul, it would be so weird if DXY up, stonks up, crypto up, and yields down? Yeah, damn right, that would be weird. Historically, it was inverse correlation between bonds and stonks. Now we all of a sudden see correlation. That's weird. Weird. It's weird. Everything's freaking weird. Weird. Do you expect VECRV yield percents to stay as high or higher when price of V curve appreciates? So percent APR on VE curve is inversely proportional to the price point of CRV. As CRV goes up, yields come down. Yield is proportional to the business activity of the protocol. So if business activity goes up, yields go up. That's generally the way it works. So what I like to do is I calculate my APR not as what's displayed at the protocol level. I calculate my APR relative to basis. X, Y, Z. I deploy X amount of capital. How much return am I getting on that capital? At my basis price, not at fair market value, realizable or unrealizable. I guess that is just what I do. I also ascribe a $0 fair market value for locked positions, and that's from an accounting perspective, and it kind of makes sense from a substance over form perspective for you legal scholars out there. It's hard to really have a grasp of the monetary system, although I feel like I do understand certain things listening to you. Luke Groman and others, what do you think is the best learning resource? It's really, you get a great aggregate from Real Vision because it's just an aggregate of all of these personalities. But between the contrasting opinions at times of Brent Johnson and Luke Groman, I mean, Brent did antagonize the crap out of Luke to the point where Luke blocked him, but that's besides the point. They're each respective story is meaningful to understand. And then you could get your little bit of excitement from Raul and his upbeat tone and charismatic delivery. And then Lynn Alden obviously understands banking and economics in an extraordinary way. And obviously all I do is aggregate all this information as best I can into my own framework. So you're literally hearing from me an aggregate composite of all of these personalities and all of their macroeconomic wisdom. And I obviously apply it to crypto markets because I much appreciate the slow, boring investor mentality of Warren Buffett, and that is what I prefer and how I prefer to behave. Patience. And it happens to be the case that patience in these crypto markets is cyclical or pays off cyclically because of the way the monetary system works and the cyclicality of it and the expansion of the global currency supply and how it's become cyclical. So all that matters from a Buffett perspective is buy distressed shit. Buy shit. And that's very consistent with what everyone says. It's like buy low, sell high. It's no hodling. That's some, high school shit. There's investing. And there's not buy low. It's buy some shit that's distressed. And if you're going to invest, you're going to buy some shit that's distressed, that's mispriced, because it produces a shitload of cash flow. And it's an actual functioning business, and that's exactly what Warren Buffett always talked about. It's like you buy insurance companies when they're fucking beat up, and they have 50 million subscribers, and they're all paying. Like 90% are paid up on their premium. So there's all this cash flow, and their stock prices being killed because of the mechanics of equity markets and derivatives, but that's irrelevant. It's a cash flow positive, stable business. Maybe it's growing. Maybe contracts, insurance policies are increasing. So then the question becomes, how do you identify something that's mispriced? And that is exactly what we talk about. Harshal, on Monday I heard about your loan to buy VE Velo. On Tuesday did the same with my ETH Cash and bought Thana and Liquid Driver. I think debt can be exercised responsibly. So what is the logic there? You kind of want to have the capital. So obviously in crypto markets it forces you to have the capital. So why would you use debt and not the capital? Because we still retain positive exposure to probably the collateral of choice, Bitcoin or Ethereum. And two, you have the cash flow to pay it. So you happen to buy businesses that are cash flow positive, which can pay off your debt. And three, timing. Maybe there was an NFT. There was a discounted NFT that was 40, 50% discounted. And that happened to be the case with Velodrome. I had no interest in taking a position, but I had the collateral. And there was a discount. And that discount was enough incentive for me to access equity in my collateral. And if I didn't take that equity and acquire that discount on the NFT, someone else would have bought it. So that was the rationale there. I hope that makes sense. So you don't just people take out debt just to take out debt, and that's how the general public operates. That's what unsecured credit is. That like credit cards. How do you pay it back? Can't take out debt unless you have a method to pay it back. So the most logical reason to take out debt is to buy something that could pay off the debt. Most people take out debt to consume. That's the last thing, the last reason you would ever take out debt. But if you're going to buy a business, it literally pays off the debt that you took out to buy the business. Now you're an investor. Book was written in the 90s. Yeah, forward thinking. The rational investor. I'm going to redefine that book a little bit and apply it to the crypto markets. What are your chances of China devaluing yen? Probably not much. Uh, the world likes to say they're gonna, they have to. They don't really need to, as folks have been arguing. Maybe they do. What do you think that does? The knock-on effects. Everyone else has to devalue at some point. By them devaluing, that means they're going to export inflation because that drives prices down. The printing of currency makes everything cheap to produce in the country. But if you look at Chinese prices, as a lot of folks say, it's relatively cheap in the country. Much cheaper than it is like in the States, for instance. So by devaluing, they would export more inflation, which causes every other country to have to devalue, which means debase, which means asset prices go up nominally. So it causes all of those economic knock-on effects and distortions. Hope that helps. IF, hope that helps. Crypto paper route BNB hits lifetime high. Yeah, that's cool. Well, there's your Thana that Harshal just talked about. Where's my hidden hand? Marionette. All right. I'm not going to complain. Was that like $100 a week? That's cool. That's cool. Marginal, incremental revenue means everything. There's the llama. Let's take a look at volume. So why is Thana cool? If you look at Binance Smart Chain, Thana, boom, 35 mil, 8%, give or take, of 512 on Pancake Swap. Uniswap picking up a little bit. Ooh. So I was never fond really of Thana's monetary policy and like Equal as well on Phantom. They never had that volume to TVO that was like, oh, that's cool. Ramsey's 1.14. Ramsey's going back and forth with Camelot and Arbitrum, but look at that, they're over one. That's big volume to TVO. Same with Velodrome. Never had that volume to TVO that was quite like, whoa. Volume to TVO 0.22. You go over to like small little Linnea, and then it's like, all right, volume to TVO 0.4. Maybe what the baseline for inspection is changing. And, I would think, because it was always high volume to TVL, like 2, 3, 4 for a bit, but obviously the revenue has really drawn in a fair amount of liquidity. Look at that TVL. Linex was double. Literally, Nile flipped the crap out of Linex for what it's worth. Where's base? Why does Aerodrome not show in the volume chart for base every now and then? It's really annoying. Athletic concept, Morpheus. That's Morpheus. I'm trying to think of a Morpheus quote right now, and it's just not coming to me. Oh, damn it! I can't. I just don't got it. I'm gonna have to watch the original, and I'll break out some quotes next time. Raul, this is my second cycle. If I am hoping, could 5x my current portfolio dollar value? Am I being greedy? No, 5x, dude, 10x. But don't expect it. Live in today. XYZ today. How much are you getting Friday? Because Friday is all that matters. And by Friday, I mean 8 p.m. tonight. Today, that's all that matters. And if you could pay off the debt that you took to buy a business, and if you could accumulate Bitcoin, Ethereum, stablecoins, if you can use Spritz Finance to pay some bills, today, you're winning. And then in the back of your mind is all the weird shit that's about to play out. And all the risk analysis that we talk about saying this is actually less risk in these crypto markets than in stupid regulated equities land with all their incredible disclosures. Extending a little bit of due diligence in these crypto markets quickly reveals actually taking less risk, even considering whatever stupid disclosure some stupid corporation is giving you. Because no matter the disclosure, you're still at the whim of humans, a board of directors, and yeah, they have to pay salaries and all the OPEX of the corporation. That's risk. And there's none of that in these crypto markets. And that's something disclosures will never talk about. Oh, we have to pay all these. Now, obviously, there's the whole humanitarian aspect of it, like employment and an actual human population. But not an investor is a game of one against yourself. And you are investing not to employ people. That's like altruism and being honorable. You are investing for yourself and your family. So if you can eliminate the risk of a human workforce, the risk of real estate costs, the risk of a board of directors and their subjective whim and their salaries and bonuses, that is an alleviation of risk focusing on these crypto markets. I actually document that quite extensively in my business structure, that these crypto markets alleviate risk and do not introduce more. It changes the entire risk evaluation equation. Hope that helps. I have always thought of buying Curve and Uniswap, but unsure if it's worth it. Complicated conversation to have with yourself. XYZ, important to understand. Speculative future, I expect others to outperform. Curve, Uniswap is worthless, but that's just bifurcating your statement. Uniswap pays you nothing, so it's worthless. It's not a business. It's not an investment. It's a cash position. So I know I'm hitting you with a lot of upfront conversation that we've had for years, but unless it pays you, it's not a business. It's not an investment. It's cash. So Uniswap, useless, worthless. And even if it paid you, everything that pays you reduces to an APR. And therefore, you have a common denominator across everything that you could potentially invest in. If you have one investment over here paying you 40%, one investment over here paying you 40%, one investment over here paying you 40%, there is absolutely no difference between the investments. They're all paying the exact same amount of APR. So you can't be forward thinking, and that's the Z component of X, Y, and Z. How likely is it to continue paying into the future? And that's an important assessment. So that does contribute to what you invest in. But ultimately, everything has the common denominator of APR. And so that brings real estate into the same conversation. So Curve pays how much APR? That's the question. Always answer the X, Y, and Z first before ever. This is your due diligence before ever engaging in an investment process. So Curve pays 41.2%. As you can see here, 40.76, and 41.85. That is an extraordinary number compared to equity markets. Um, and it'll be inversely proportional to curve price and proportional to business volume. So that's why we talk about how much potential financial activity is going to occur on chains, how much stablecoins are in a particular market, so on and so forth. And then you go over to the Kingdom protocols with Nile cranking out. All right, it's not 120% APR on my basis. And Ramsey's is what, 70% on my basis? So calculate your APRs based on your basis and adjust for fair market value and respect the X, Y, and Z. I'm trying to make this response as simple as possible and concentrate as much as what we talk about to help you, Nick, because man, that's a good forthcoming statement of interest. But I noticed that you threw in Uniswap. So we gotta also respect where we are in the market. So what is curve price at? 47 cents. Still at a discount, 46 cents. So the most important thing about curve is don't expect significant appreciation. And I've talked about it quite often. If curve ends 2025 at $3, I'd be like, oh shit, that's crazy. So that's something very important to digest. And that'd be a whopping 6x on the money on principal. And if you're locking as VE curve, you can't sell it. And if you're not locking as VE curve and you're doing an STY curve or an ASD curve, that's not an investment because you can sell it. And at some point, if you can sell something, everything must be sold. Because we're about to enter a period of excitement in markets, but there's the other side of that. And folks remember that in end of 21 and into 22. If it can't be sold, you need to sell that shit. Hope that helps. Little whale, oh my God, I made it live during work. Welcome. Hey, Cap, much a pleasure. Nick, always a pleasure. It's hard for me to balance our historic conversations that we've had for years and folks that are interested in um, upping their game and getting into the fold of this very historic conversation we've had because this is not simple. And it is a long story that dates back years at this point. My man, Ace V33, whatever emoji that is, because Uniswap is not investable. It's not an investable business. It pays you nothing. It's worthless. Capital gains, trading, that's not an investment. It's an arbitrage. It's a carry trade. Maybe you borrow capital to invest in it, and you're speculating on appreciation. I'm not. I told everyone that in 22, that this year, in 24, we're going to engage in the market. Woosah. And that's where we're at. So it's very interesting if we could find some of those old streams maybe or those statements that and look where we've come. Look where we talk about in Discord with regard to accounting. And look where we talk about on these streams with regard to investing. Uh, there's nothing to do relative to what I say. And I say investment season is over. And when I say that, it means it's over for me. Because I've spent the last 2 years investing and preparing for the weirdness that is about to be bestowed upon us by the perversions of the global financial system. David, welcome. With all of the XYZ income coming in, what are a couple of purchases you made recently that improved your quality of life? Well, everything. All of my investments produce revenue, and that revenue is technically for my children, according to business rules, but that's another story. Uh, all of that capital, I treat it as I do my income from work. I work, I get a paycheck. The revenue I make from the business is used to settle the liabilities, administrative liabilities for statutory compliance purposes, I state this, administrative liabilities of my children. So, which in turn does indirectly benefit myself, because otherwise the capital, my personal capital, would be spent on those expenses. And then, frankly, that this income has produced is a business. So the logic there is something I said shortly ago, and maybe this will give you a perspective bump. Um, let's find it. It's worth it. Nope, not Rodney Dangerfield. Well, here. How much would you spend to buy a $1,000 a week salary? That's a great question to ask yourself. There was something I said earlier. Uh, where is it? What I said about college. I think it was right around Rodney. When I graduated college, the career office never told me I can buy a salary. The career office told me to get a job for a salary. But they didn't understand the way the world works even back then. And this was literally like 2007. So there, the logic there, David, all of this contributes to your quality of life. That you have a job and you work for a salary, but that salary you could buy. So the question is, what investments will produce a salary? And a salary is the same whether it's from an investment or work. So, like starting, I'm trying to give the perspective of like a kid, a youth, a person much more youthful than myself. My 16-year-old cousin just can't digest it yet. But all of this, like, I, uh, uh, post. I'm looking for a post. I just can't. They don't get it. It's so much easier to think over long periods of time when you're older. And I would have never understood this. I say that to myself all the time. I always say, if I was the hiring manager hiring myself for software engineering when I got my first job, I would have never hired myself. I wasn't employable. And this is the same thing here. A kid can never understand this. 100 grand invested at 20, at a 40% CAGR, when you're 30, you're taking a $600,000 a year salary. And you'll have $3.5 million at 30. $100,000 invested at 20. Now, 40% CAGR, put that into perspective, Bitcoin has a CAGR of 88% over 10 years. That'll probably come down over time. So the point is, this calculation is done at a 40% compound compound average growth rate. So a CAGR takes into account in 2026 when everything is falling apart and the portfolio is down 85%. That's the whole point of these long time frames, to have a perspective over. I have a 78% CAGR since 2019. It's probably higher than that, actually, because I've spent a lot of capital over the years. So that, but you tell a kid to work at Chipotle and put their money into urine, STY. You can't. I don't even know where to begin that kind of story, because what is this? I can explain it. I invest in things like this, but how do you explain it to a kid that literally is getting a freaking paper check on Thursdays? and they just got out of high school. I just, my wife's boss always said he wishes he could take his brain, and this he is a very veteran and extraordinarily experienced dental practitioner. He wish he could take your brain and put it into someone else. You can't duplicate life experience. And look, you throw this screen at a kid, and they're like, "What the fuck is this? Is this even real?" Because I remember when I was in college, and it was like, like high interest yield, and how do you differentiate between what is real and what is not? Like I see this page, and for me at this point, this is urine. This is urine. This is one of the original protocols, one of the most famous crypto protocols. And Andre and Bantag and I have all this experience and knowledge and all this comfort with this is a remarkable software. I've seen the software that Yearn produces, and it's extraordinary. And the way they've done their balance sheets and the information that they have, and it's incredible. I mean, look at this. The Frax Facts. I keep this up nowadays. This is the Frax freaking balance sheet. On-chain balance sheet in a website. This is crazy. This page is insane. This doesn't exist for any company on the New York Stock Exchange. This doesn't exist for any company on NASDAQ. This doesn't exist in meat space. This is insane. How do you tell someone that? How do you teach someone that this is insane and why this is insane? I don't know. And all I could do is just talk to you guys about it. This is insane. Ace. 100% voting rewards from stuff like Aerodrome and Velodrome, protocol growth are better bets. 100% APR is extraordinary. Let the price point double and it's 50%, but it's 100% on basis. And the potential volume growth on base and optimism is extraordinary. If you're comparing to Curve, better isn't necessarily better. It is very noteworthy what Curve is, and that is grossly misunderstood. In fact, at this point, they're not even the same protocol. Aerodrome, Velodrome, Ramses, Nile, V33. Those are exchanges. Curve is no longer an exchange, in my opinion. That is a secondary business. Curve is a credit facility that has a completely integrated vertical stack of liquidity management tools. It is a completely in-house credit facility capable of managing its own liquidity. So that is something that folks don't understand, especially folks on social media. This is not the same business. Not even close to the same business anymore. And maybe that is something that people would appreciate, being told that it's a completely different business. So what do you do with different businesses? You consider diversifying, and you consider everything about it. You extend due diligence prior to investing. Concentrated portfolios are where you want to be. Diversification creates resiliency in a portfolio. And that's how you construct and size positions and craft a composed portfolio. Hope that helps. Brian, happy Wednesday. Much a pleasure. Last couple of questions, and we're going to wrap it up for today. Raul, if you understand liquidity like you do, thanks for doing this for us peasants. You guys are not peasants. You guys are informed at this point. You got to remember, very few people listen to me. There's less 60 something hundred on YouTube and less than 20,000 on X, and look how I talk about like the amount of dollars in crypto markets. It's basically zero in the grand scheme of things. So you guys have a perspective on the mechanics of the global financial system that few have. And everyone will have a different capacity to absorb what I talk about. But over time, that very much sets you apart from the vast majority of persons engaging with these markets, trying to get the next dog coin or a whiff hat and make a fortune. And most people lose everything. If you need a reality check every now and then, look at coin fashions, and the vast majority of people lose everything. And I have no interest in being rich. I have no interest in being wealthy necessarily. I guess wealthy maybe is a decent terminology. But what is wealthy? I just want my bills paid while I'm sitting in the backyard. Isn't that something weird for someone that wants to engage in these crypto markets? Because I can't do this in equities land. I cannot achieve what I want to achieve in equities land. There's too much risk in equities land. And I have reduced my risk by investing in crypto markets to achieve what I define as being wealthy. I want to convert my work salary into a business salary from the backyard at the barbecue when my girls get out of school. And all I have to do is click a couple buttons on Wednesdays because of making good choices years earlier. I don't know. To young kids, they might sound like a boring future. But that truly is extraordinary because you can't do that in traditional finance. Hope that helps, ladies and gentlemen. We'll wrap it up. I've talked to your ear off long enough. I thank you all for joining me. Wednesday, June 5th at 12:46 p.m. 334 people made it to the end of the stream between X and YouTube. I thank you all for joining. Tell everybody to subscribe. If you guys have forgotten, Discord is starting to get popular again. It is the most rational community in the entire crypto space, and we have a lot of veterans in there that have survived the entirety of the bear market. All this experience of survival skills. It's a great place to be that even I value. It's priceless. The conversations that I've had over the years, and it has a treasure trove of history in all the different channels of conversations that we've had, including our most recent accounting discussions. Because a portfolio is only as good as its accounting. It might be just as important as the portfolio itself. Anywho, it's a Wednesday. I'll see you again on Friday. Y'all have a good one now. Peace.